What's up? Thank you for being with me here on Friday night. Since I last streamed, the Roaring Kitty came back and stock market went crazy. So GME over the last few weeks right here. You could see initially when the Roaring Kitty came back on a Sunday, right before futures open, not suspicious, and released that meme of somebody sitting forward in a chair, indicating he's getting serious. Well, that's when everybody started piling into the stock. On Sunday, as soon as it opened, people were trying to get in. Robinhood had to shut it down because they were out of shares probably right away. When people saw this, like, it's been 3 years and suddenly this dude's back. So they got in right here. But only the people that knew, because it was basically just Twitter. And if you think about who's on Twitter right now, a smaller portion of the population than was the first time this thing happened. So a few people got in quickly, and then the news spread, and it just shot up. I was happy about this because I knew it was a trade that I could make, but I was also thinking this is going to be extreme because this is a continuation of what happened in 2021, and I don't think people still understand what actually happened. The power of finance shifted to average people in 2021 for the first time. Now that narrative is actually not the full story. It's a small percentage of the actual story, which is hedge funds and institutions doing everything. But retail played the part because they were the ones that got serious. Anyway, GME squeezed hard, and people weren't ready for it at that point. I wasn't even thinking about it, but I knew when I started seeing this stuff, because I haven't been on Twitter until recently because it's one of the few places that is decent for stock news. Like if you want to get a quick barometer of the market on something, Twitter's great for that. It's an absolute cesspool for everything else, and it's terrible, but it is good for some things. Like it's good for financial reasons. And when I saw this circulating, I went, oh, this is going to be something. So I just bought shares. I didn't get them on Sunday. I didn't even try. I knew well enough to know this is going to be a quick trade, easy. And it was. Look at that. A couple of days, it goes from the mid-teens, like 16. It had already pumped up a little bit because I think people were getting excited about a few things. And if you notice, it had been pumping for a while. So it wasn't going down quite as easily as it was before. And I think that may have been one of the first things that triggered it, because number one, this was at derivatives expirations. Okay, that's the important thing here. It's like there's so many different derivatives that expire at different times, but big ones expire around this kind of regular cycle. And this just happened to occur around another one. So you think, all right, it's good timing. It's been rising for a while. It looks good as far as the share short because we're back over the float again. It said it was like 20-something% short ending the month before the Roaring Kitty showed up. But then suddenly, it's this over because the position has been hidden. And that's one thing that people don't understand. It's actually really easy to hide your positions, and you don't even have to do that much to hide things. And they did. So it shot up because things got extreme. There were more. It's the same deal. There were more shares short than existed. And the reason that happens is because it's just like money lending. They're able to just lend you shares of things they don't have if they have, was it authorized participant or whatever, AP? If they have the ability to write you shares versus they don't. But what happened with this? It was the same short squeeze. People hadn't thought about it for a while. I hadn't. I didn't care that much. I didn't really buy the narrative the first time around because I'd been trading long enough to know that, like, nah, massive hedge funds have to be involved for it to move like that. It's not just like random people. And that was the thing. The story, it spread to hedge funds. I think that's the core distinction of this whole thing. It's not that it's like retail versus hedge funds or, institutional versus retail, whatever you want to call it. It's actually that a theory spread from retail into institutional, and usually it's the other way around. Just the basic, and that's not a new thing. Everybody's known about short squeezes forever. It's not new to go find the high percentage short stocks and just bet on them going into really down earnings and stuff. It's really not. It's so obvious. People were doing this a very long time ago. But this was the first time the mainstream had access to that kind of information. Because to figure that out, you had to be in options or derivatives long enough to figure out the decay of these things and how quickly you have to have them do what you want them to do. And if you take the risk on them to sell, you have to make sure that you can cover that, because if you can't, it's so catastrophic. Like you can win for 6 months straight and then have one loss that just takes them all away. So no matter what you do, you can go for the sure wins, but you're going to go for the losses that actually absolutely wreck you. Or you're going to go for the responsible bull thesis. Not the one that's like, oh, I'm gonna buy the $128 GME calls for this week. With people on Wednesday that were buying $128 Gamestop, what do you think they feel right now? It's at $27. The peak was $80, right? And this is post split, so these were much higher price targets back at that time. But right now, We're still catching that. 80 is almost there. I think that the previous high was 120. Zoom in on that. There's the year's progress. So you can see it was actually holding somewhat flat, but it was on a downtrend for most of the year. And then suddenly this Roaring Kitty thing picks up. And look at that. So the Roaring Kitty thing was where the squeeze happened. This is where I saw it. All right, so the first place he came back was Twitter, and I'm like newly there paying attention to it. Only because I only check it when I don't have anything else to do. You know, it's the last priority on the chain, but it leads to things like this, so it's worth it sometimes. So at some point before that, people were expecting something. So I'm sure these were the people that knew what was going on. This was Keith Gill, right, for Roaring Kitty. He'd been loading up through all of this, and he's just been trying to get a good average. I think that's what it is. If you go at this thing long term, switch to OpEx. You're just trying to go from one contract cycle to the next. And you went from a very basic bull contract cycle to the absolute worst case scenario if you're on the wrong side of that trade. So if you took the risk and sold the options or sold the shares or made sure that you were on the short side of this trade, you got wrecked in this, to the level that stories were written about. This isn't just a regular short squeeze. This is like massive institutions getting wrecked so fast and so hard that they really don't know what to do because they've never been wrecked like this before. Right? Again, the second time this happened. But why? I mean, there were signs. You could see it would pump it up. And if you were a short, what you were probably doing, and here's why this happened. So this is the crucial part that people miss. What the shorts were doing in this time was using this as an excuse to get shorter because it always worked out. So 2021 happened, everyone's afraid of it, but they get in and it's just been a downtrend ever since, right? So this is 2021. Look at what everything that's happened equated to. The top of the old range. So you can see a range kind of formed, even though there were these big spikes. Most of the time it was kind of trading in this area, and then after it dropped, this area. So we came up to the top of that second range right here. So up here, a little bit above that, and got to like, all right, this is insane. We haven't been here in years, so gains need to be taken. And they did. Pressure right back down. But what happened? They got shorter. We had, look at this, 2 green quarters. So if you're a short right now in this, if you're still in this, you are absolutely terrified at this point. Even though everybody else is burnt out because this live stream was terrible, you're terrified because it hasn't been like this for a while. Every time it pumps up, you get shorter and it goes down. You know, the smart ones were just cycling through the contracts responsibly, taking gains, removing risk when it's not necessary. You don't need those last few pennies. Seriously, if you've made, 70, 80, 90% of the contract, you can move to a new thing and protect yourself, because eventually theta is going to kill you. You have to get to a point where you can be secure with the amount of delta you have without giving up too much theta. And if you're holding these like weeklies and monthlies, it's not going to work. You need to get on quarters beyond what you're looking at right now. And if you don't have the capital for that, you don't do that. So you wait for these times where you can buy these YOLOs. And what's going on right now is this is the most YOLO instrument on the market. Regardless of what's going on in any asset class right now, Gamestop is on everybody's radar. Again, and it's been a long time. Even though there have been ups and downs, it didn't matter until this happened. And Keith Gill came back. And then he had a stream today. And everybody was pissed that nothing happened. Well, you know what he was doing? He was just showing you that he's the guy. Right? And here's the thing. We still don't, that doesn't even mean that he's the only one doing all of this. It just means that he's proving he's behind these memes and this account that's been active after so long. That's all it was. He wasn't, people thought he was going to come out like a prophet and say like, you just hold and everybody's going to be rich and we're all set. And he didn't do that. He came out and he was terrified because he hadn't done this in forever. And then the fucking television put him on live with the biggest short seller that hates him. You know what I mean? Like the whole thing was absolutely insane. It's just, you think about it, it's just a guy streaming in his house. Yeah, but he was streaming in front of everybody. Everybody that he had been sending messages to for this past month, everybody that he'd been getting involved in this. He's looking at like the spoils of what he's done. And people are asking, is it like an insider thing? Is it manipulation? Why can't he do what he did and then people just go on CNBC and do what they did? And number one, that's a fair question because why not? Right? Where is the line for manipulation of this whole thing? And that's what this is showing. It's showing you that we don't know the line as clearly as we think we do. And we're making judgments based on our personal agenda. People don't like the guy, they're going, it's manipulation and this and that. People that do like him say it's like it's a David and Goliath thing and they're on him. You don't know anything about him, dude. I don't know anything about him. All I see are the stories. People come in and they're like, oh, it's this or that, it's this guy, it's this prophecy. And they're wrong the whole time. And then eventually one thing just happens to line up and suddenly they're a prophet, It's all over the place. And that's the worst part about social media, especially Twitter. It's just the absolute garbage heap of that. And what do? You just go in and you follow people, you watch their shit, try to like the stuff and comment to help with their engagement if you think they're going to have some kind of beneficial content. Other than that, you don't really have many options. You go to other platforms and it's the same thing. It's the same people. And, it's like only certain people want to get out there and do this stuff. So you're only going to meet people that are just as crazy as you. That's it. And that's actually good because that's what you want. You're just afraid of it because you don't come in contact with your own kind of crazy very often. When you see a whole world of it, it's like, okay, this is too much for me. And then people fail. But social media is a beautiful place. You don't have to win or fail. You can just ride the wave, dude. You can just come out here and like do what you want to do. That's what I'm trying to do. I was watching Gamestop. I played it a couple of times. When that thing came out, I bought some shares and I was up huge. And I thought, all right, the old high is 120, triple digits is easy. That's my dumping point. And actually, that's a very responsible dumping point, especially if you compare it to what people are saying about this stock when they're going absolutely nuts about GameStop and saying everything is this big conspiracy. Like they believe, oh my God, right, Cohen's the fucking Jesus, dude. Like it's unbelievable. You have no idea what these people are doing. They could be orchestrating this together. They could be against each other. You have no idea. So the best thing you can do is just watch the chart and see what usually happens. And this is what usually happens. Switch this back to a more reasonable time frame. Let's go to 1 day. It had been trending down. Or actually, let's go to 1 week. That'll give us a better picture. So if you look at the 1 week time frame, it had been trending up for almost a month and it exploded. So this was a short's worst nightmare right here. Watching this happen, getting terrified, but actually during this, just being so confident, thinking every time this happens, just get shorter. So that short interest that people were reading at the beginning of the month going into this thing was greatly undervalued. I 100% can tell you there was more short interest than what was being reported. Not because it was a scam. There were literally short sellers that were getting shorter. Anyway, so the short sellers that were adding to this got absolutely destroyed. So they needed a way to crush this down. And I'm sure the ones that had media access were the ones pumping stories about like, they're going to drop him from the E-Trade or whatever. They're going to drop his account. They're not going to support him. Why? What do you have? That means you're getting pressure from somewhere where you get your money, right? And it's the same thing with other brokers. They're all getting... Everybody has a deal, right? The hedge funds and the brokers, they all have like a role to play in the economy, so they work with each other and make sure they stay in business. And that employs a lot of people, and there's a lot of incentive to keep that going. So and it's not all bad. It's like I said, a lot of people are working in this industry. It's not just the assholes you read about that like exploit each other and they're at the top, like Elon Musking the world and stuff. No, it's just there are regular people that work for these industries that are just trying to help and trying to do real work. And the people at the top or the people in the middle, more likely the people in the middle. We're always talking about the people at the top. It's like the people at the top are usually not terrible people completely. They're just like gifted in an artistic way, but they have like a really awkward way of expressing it. It makes them inaccessible to a large portion of people, but they're perfect for another portion of people. And then there's middle management, which is like the perfect of the perfect, if you think about it. What we call the most average is just the people that figured out how to do all the stuff right. So they know just enough to get the thing going, but not enough to be experts at anything. So they're in that area and they hate being in that area, but they don't realize that's the most important area to be in. You hate it, but it's important. Yeah, you're not in the grunt work, but then if you're in the grunt work, you want to be in middle management. If you want to middle management, you want to be up higher or lower or whatever. And it's always like you want to be somewhere else. But if you just look at where you are and go like, okay, what options do we have right now to make money? Oh, there's money in stocks. Is it stupid to look at stuff like GameStop? Absolutely. It's terrible. GameStop is so dumb. You really, if you don't know what you're doing, you should not be touching this stuff. I'm telling you, I've been doing this for a long time, and this is still not easy to time. Because I bought this. I double, tripled, almost 4x. Actually, did at one point. My profits. I didn't take. Well, I took some. All right. So on the way up, it got to an extreme, and I thought, all right, I need to at least take my cost basis out, and then I can maybe take a little bit of profit along the way and be okay. So that's what I did. I took out my cost basis. I let it go because I was expecting triple digits, and like I said, that's a reasonable expectation when the old high is 120 and things are just getting crazy. And the dude hasn't been here for 3 years, and like every long-term thing lines up. Okay, yeah, that might be a little bit more than the normal squeeze. So I was ready for that. I was gonna take it, and I started thinking, should it be the 90s or the 80s? So I almost caught that thing because it hit 80, I think, or maybe in the 80s somewhere, and then it came back down. So this chart says, well, 65. That's not. See, on the shorter term time frame, it's going to show you the true high, but on the long term, it kind of condenses it to a range. So if something happened at 4 a.m. on some random trading day, it's not going to show up in the monthly or the quarterly or the weekly. But if you switch it to the daily or the hourly or whatever it is, then you'll be able to see something. All right, 80. So there we go. So when people talk about this, it was the same thing the first time. The peaks were in the after hours. They weren't during regular trading hours, which most people aren't going to have access to, especially in 2021. I mean, 2021 was when a lot of this started. And the reason a lot of this started is because things like Gamestop happened right around the same time. Crypto peaked. Bitcoin got to an insane high. Everything crashed. And then the Fed started raising rates. And that was when the money had to come back. So it wasn't like free money anymore. They're reeling back on loans because of that. Credit's tightening. Everything that leads to an expansion is just being drawn down. And they're trying to do it in a way that doesn't absolutely wreck everything. And as much criticism as people give them, I know they're not perfect and that hasn't like completely been smooth, but like it's been better than people are giving it credit for. Even though it's technically been a policy thing the whole time on both the Fed and the government's account. Like it's not, neither one of them is the worst at it. They both just kind of had the same sort of policies that led to the need to do this. And it's basically just like, how easy is it to get money? That's the whole game. You don't have to think about all these complicated things. How easy is it to get the credit I need to do what I want? I'll take the risk as long as they give me the credit. The Fed says, all right, how easy is it going to be for this fucking jackass on coke to get this loan? Because we know a lot of that is what it is. It's people on drugs getting loans to do crazy things, and once in a while they work. But when they work, they're a genius. And if they don't, they're a terrible person and a burnout. It's the same thing. It's like the same person. One just had a slightly different outcome. And you get the world we have today. So why don't we just look at stuff like GME and think, can you take a little bit of money off of that and not believe the narrative? Yeah. So I was ready. You know, if I had thought about setting, here's the thing. I thought about setting an order for $75 for just a chunk of shares when this all started happening. I thought, I'm looking at the old high. It's 120. I don't know if it quite gets there, but where's about the halfway point? All right, 60. Yeah, I can see it getting 60. So what if I just put something around there to sell a chunk of shares, and then I ride the rest. So take a little bit off the top and some profit, and then go with the rest. Well, all I did was basically take out my initial investment and a tiny bit of profit. Like such a tiny bit of profit, it didn't matter. I should have just left them in, like taken more later. But I didn't take them, and I went through this downfall, and I thought, oh man, I really need to get out. So it jumped. I think I took a tiny bit more, and then I just held. And this thing just never came back, right? Well, not never. It took a couple of weeks, but boom, suddenly the Roaring Kitty posted his position. We get something like that. And then this happens, right? The day before the Roaring Kitty stream, what happens? They pre-release earnings. They were supposed to release it on the 11th, which is like next Tuesday or something. And then they also announced another share offer. So they're selling 75 million shares. Boom, in the middle of the night. Look what happened, the response to that. Oh, you mean there's liquidity now for all those shorts that have to scramble to get shares that aren't available? Oh, it's available now. So the thing came back down. And that was the bottom line. You didn't have to, the narrative said, oh my gosh, the diamond hands through this whole thing. It's just unbelievable. Is this thing going to pop again? Yeah, look at this pop and drop. Of course it's going to pop again. Is it going to be as high as last time? Probably not. I mean, the first target is this previous level that it was at before it broke down. And then after that, up into here. So it might get to those points at some point, but we're looking at the same kind of thing. However, the total amount of shares they're introducing is 75 from today. Is it like 45 from the one last week, 2 weeks ago, whatever it was? Because they got another one into the previous run-up too. See, they're not dumb. They've been waiting years to have something like this. When this happened, they knew they needed to take advantage of it after they saw this. So people were like, why did they sell shares so early? Well, this happened. They expected this to turn into all-time highs in a couple of days, and it turned back into what they were sitting at before. It was terrifying, with a big bounce in there. It was always after hours. That's what I'm saying. The stock is played after hours, not so much in hours, unless you know what you're looking for. Whatever the big trend is going into the U.S. Open, it's gonna, if it's been pumping, it's gonna crash. Because look at the volume. That's your biggest key. There's not a lot of volume, but you can see the bars. So this is a lot for after hours. Normally you don't see anything, but if you can see bars in this thing, it's going. Oh, I'm getting beat up. I need to get back to the game here. So where am I going? Get out. I'm running the wrong way. Whew, I need to get back to the game, actually. This is what I always do. But anyway, let me finish my thought about GameStop before I get to the actual game. And I will play this time. That was my goal. I just wanted to get my GameStop shit out there because that's all I've been paying attention to. That's all people have been talking about. It's GameStop everywhere. I'm almost dying, but I got out. See, I'm paying just enough attention to figure something like that out. Look, there's a note. Let's fight it. Why not? So the point was, GameStop went insane. And you could have taken advantage of that, which I took some, but I didn't take enough. And I just watched it crash. So we had that dip, and then that bounce. And I was able to actually take my money out roughly where a little bit down from where I was, but not too bad. It was really nothing. I didn't have a lot of shares in the first place. I knew the volatility was too high for me to invest enough to be hurt if I lost, right? Because people, if you lose on GameStop, you're going to get made fun of. You could lose on anything else, it's not a big deal. But if you take a loss on GameStop, oh man, people are going to fucking clown you for so long. So I was ready to do that, man. I just wanted to get in there quick and not be too worried if things didn't work out. But I had the chance and I got something, so I basically pulled my money out with a slight profit, and that is good for what most people have right now. They're all crashing. Why? Because they jumped in on the first one, it didn't work out, so they got out at the wrong time, when it was way, way down. And then they started coming back in when the thing pops. I'll switch back to the chart so I can show you this. The point was, this was scary for a lot of people, and this was where you make money in after hours. Or early, actually, in the morning, usually. So after hours, it's going to pump. If you can take your gains then, it's better than the morning. I think after hours is the best because liquidity, like, it's different at night. People are just ready to get out of things at night. They don't want to think about it anymore. It was a bad day, whatever. They're just done with their position. So if you want to just sell your shares real quick or get into something real quick, there's usually somebody that's desperate enough to, like, they've been waiting to get in or they just want to get out so bad. And there's not a lot of them, but you can get something. And you'll do that. That's when you'll be, like, the craziness has settled down. You'll start thinking about it more and you'll think, man, maybe I should do this. You know, so people are doing that, right? Like the people that saw this and were thinking, oh, it's my time. They missed the whole beginning part. They were getting in on this. They got crushed. But this was the time, if you were in on it and you were bouncing back up to the 60s, like it popped here to 63. I mean, if you had set the order 60-ish, 50-ish, you're out. You're good. That's where things went. That's where liquidity drops and things went insane right here in that low liquidity, early morning weird area. After news is pumping, people don't know what's going on. It's still early. Yeah, get out of that. You might miss this, sure, but I mean, you're also going to miss this, and you're not going to be tempted to average down like I was. I thought about it. I thought, ooh, let's get in right here, and I think I bought a little bit right here actually, and it was right. I pumped up a little bit, and I did the same kind of thing. I took tiny gains, and then the thing just crashed. So I have such a small win on this. It's ridiculous. I should have been in and out right when I first thought I should, and then I would have been perfect. I would have been the best trade I could have made for my strategy. But no, I held on to most of that and nothing happened. So I dumped out of it. And then things got exciting again, so I dumped back in. So I got in at weird times. You know, this happened and I was ready for it. So as we were coming down here, I was adding, boom, shot up again. The same thing. Emptied a little bit. Took my hit, went, oh, well, here we go. Another, like, no gainer, basically. A slight gain to me is now a no gain. And I'm so thankful to be in that position now. There was a point where it's like, I just wanted to figure out how to make a trade. You know, now that it's like, all right, I can make the trades. I'm frustrated with the amount I make when I make the trades sometimes. Most of the time. You know, I make some good trades. Like, there have been some great trades this year, but this should have been one. This would have been my best trade of the year, you know? But no. Missed it both times, and at least it wasn't so bad. Like, some people are down ridiculous amounts. People have been posting their portfolios. That's the whole thing about this crazy GME thing. People got so emotionally involved in this thing that they had full portfolios. They had all of their money leveraged, and it was absolutely terrifying. They're posting screenshots of entire accounts at just GameStop. And I think, okay, that's fine. People freak out too much about that because it might be a separate broker and just what they're doing with that. You know what they're doing with other brokers. Like, I have multiple brokers, so you could look at one and go, oh, this is what you're doing? It's like, yeah, on that broker. You know, so who knows what Keith Gill is doing on other brokers or what the people that are playing this in other aspects are doing with other brokers. For that matter, what do you think people like Jamie Dimon are doing when everybody's talking shit about Bitcoin? And it's like 2019, and you could tell it's a thing at this point. You think they're buying it when it's down while they're trashing it, or do you think they're just ignoring it completely? No, they were buying it. I guarantee you all these people that are still talking shit about Bitcoin in some way or another have been buying it for probably a decade. because they noticed very quickly that this was a thing, and they said, oh, it's limited. Well, I'll just buy it. I guess that's what like the hardcore Bitcoin people don't understand. It's like the fact that it's limited means somebody could just buy it. There could be one that thing you want, that whole decentralized thing, is not possible with Bitcoin because people will buy it that have more money than you. And as the production lessens or reduces, you don't really have the same bargaining power. Like, you can make as much new money as you want, but if 90% of it is mined and acquired, you still have an elite class. That doesn't solve the problem. But that thing that they say it does, like, here's what Bitcoin does. It's a way to preserve your wealth and speculatively grow it. It's an asset that grows more than anything else you're going to find. And people that are fighting it are threatened by it. That's the bottom line. It's not some new thing that you're like, oh, it's just a fad. It's been around for 15 years plus at this point, because when it came out, it had been in development before that, and the concepts for that had been in development. So this has been in the making for a long time. Digital currencies were coming around like at least in the 90s, if not before, probably as long as we've had computers. But at some point, you have to centralize it. And if Bitcoin is going to get to a point where so few people control so much of it that the situation has just changed hands, not situations. And that's fine. It's like gold. It literally is like gold. It's scarce. It builds up over time. But as the incentive drops to mine it, because we need an expandable currency to fit our economy of the future, it's not just people now. We're going to have AI. Right? Think about this. Here's a crazy thought I just realized the other day. AI is going to be trading for us and doing financial transactions for us more and more as time goes on. So they're probably going to need bank accounts beyond what we have to do certain things. Because you might want an AI that trades on behalf of you, that sets your risk aside. So maybe the trading bot blows up, but at least your personal assets are safe. And you're just trying to separate yourself from these crazy events that people who invented Bitcoin were trying to separate themselves from. You're going to be, all the same problems in the world are going to still exist. It's just the currency by which we do it will be different. That's all we have with Bitcoin. So there's going to be others. You're going to need more currencies. All right. You're going to need a currency, I should say. So you need a store of value. You need a mode of exchange. You need a currency. And there are other things you need. That's why we have credit that allows expansion, which is why inflation isn't bad. It just needs to be controlled so that it's not harmful to the bottom portion of the population that has the most to bear in these situations. And Bitcoin does not solve that. Bitcoin makes that situation worse. Now, here's the deal. I'm not against Bitcoin. Okay, I don't have this thing out for like all these maxis who want to fight about it. It's like, I'm not trying to fight you about it. I'm trying to say there are problems with it if we just use Bitcoin and not other things, because we're going to need a currency. There's a reason gold isn't money right now. I mean, it is money. That's the wrong. There's a reason gold isn't currency. It's money, but it's not currency. It's something of value that continues to grow over time because it has uses. The people that argue that it doesn't are absolute morons, because it does. It has industrial uses, it has artistic uses, it has personal uses, it has practical uses. Not to mention, it is a scarce enough source to be money that people can't counterfeit very easily. Think about what could you have made in the past that people couldn't also make? Not a lot. We have enough trouble with these bills that we have, much less whatever you could have made thousands of years ago. So gold makes sense. And you think about today, it's still valuable. If gold isn't valuable, why do people want it? And if people don't want it for, personal monetary reasons, why isn't it just all at the manufacturers at this point? Why isn't it all at the artists at this point? Because there's value to it. That's why it sits in lockup. Because at this point, it's still somewhat rare to get. That probably will change, especially with autonomous vehicles and AI. We keep thinking about, how do we get to the asteroids and mine them? Things that don't need biological atmosphere to survive, something that can just go out, mine the thing, bring it back, and it's lightweight, it's compact, but it can get a lot of stuff, and we don't need to worry about habitat and waiting for years in stasis and this and that. It can just go get it, and maybe it takes a while, but guess what? 100 years, the thing comes back with loads of it. That's worth it. So maybe not now, but in the future, things will change. We're going to be sending more and more probes to things. We're going to be using AI to do more and more complex things. Eventually, the metals that are way under the sea and up way in the stars, probably one under the sea, is when we'll get first with how propulsion goes and fuel and stuff. Still, think about it. An AI robot, yeah, okay, we can't get down there, but maybe some robot can get down there and get the huge amounts, the huge reserves of gold that are in the parts that we can't reach yet, just due to conditions. So eventually there's going to be something. You have to be naive to not at least think about that possibility. But that doesn't mean it's going to happen completely, and it's going to happen quickly. You really never know. So my point with this whole thing is Bitcoin will be a mode of currency because it's scarce. And yes, that prevents the whole inflation thing, and that's its goal. But we need a currency that we can expand as we expand our economy. And people that don't have a lot now are going to need to have more. And they're not going to be okay with fighting for little scraps of what other people already own, because it's going to still seem like it's inequality, because it is inequality. You haven't gotten past that yet. So having a currency that allows people to do what they need to do is going to be necessary. What that currency is, I have no clue. But I'm paying more attention to things that aren't capped now than are. Because Bitcoin is great for what it is. Maybe there's a security risk at some point that's exposed or something we don't know yet. Of course, I always keep that in mind, and I expect there to be at some point. But that doesn't mean I don't realize that I could be wrong about that. So it's good to have at least something in there. So I look at Bitcoin as like the driving force behind this whole thing, because it was the original and it has the staying power, the value, as long as the development team keeps it going. And if the development team decides to fork it, they'll have to fight the community, and it's who knows what'll happen. There's a lot of diehards that'll stay with it, which is why I also think it'll be secure, because the old school people that realize why we need to do this are going to stay with this project for their entire lives. And even though there's going to be all these new things and things that compete with it, things that improve upon it in these little ways, it may not get past the basic fact that Bitcoin takes care of. We kind of take the basic things for granted and think everything has to be like super complex and high-minded and everything. The base layer, if it's just better for some reason, it doesn't matter what your opinion is. And that's what I think Bitcoin brings to the table. It's just a base layer of somebody going like, how do I make something we can't inflate? Because I grew up in a time where my entire future was destroyed because people just kept printing money instead of taking care of their problems responsibly. They kept sidestepping them with bailouts and with printing money and with QE and everything. And suddenly we have to tighten things up to rein it in because it's been too extreme. Well, that's the thing that the bears don't get. We're in a much better place to protect ourselves from a problem, or to I should say, to boost the economy, right? Because it is kind of about boosting this thing. This camera's. Let me get back to the point. Bitcoin is good for what it is. We're going to need more than just Bitcoin for all different kinds of stuff. NFTs and currency and just storing your assets in general. Storing virtual spaces, not just assets. Everything we have can be virtual. There's going to be a version of that, a contract to it, just like we have in the paper world now. It's just an improvement upon it. Or maybe it's not an improvement. Maybe it's worse. I don't know. But this is just where it's going because of the efficiency. It's really follow the efficiency. What's the most efficient? Well, that eventually breaks opinions, because opinions are, people can be stubborn about their opinions, but then they die. And what happens after that? Someone else's opinion takes over. And eventually people get tired of the bullshit. They're like, why are we even fighting about this when we have all these other problems? So the old problems just get dropped, and they just do it in that way because it works, and figure out something else later. The whole reasons for everything eventually fade away. So you might as well just do the most responsible thing. And if you're going to play something like this, you just get in, you get out, you get on with your life. That's what I did, but I didn't make that much. I should have, when I 2x'd my money, I should have taken at least 3/4 of it out. No, not half, not 60%, 3/4 of it. Just because look at how quick these are, and they're after hours. You're not going to catch those. So you set automatic orders. If I had set my order for 75, like I thought about when this thing started going crazy and it doubled, I thought, maybe I should put something like $10-15 above what it is now in case it explodes. Then I thought, well, if it explodes, maybe it'll go to the old highs, which wasn't unreasonable at the time. And if I was going through this again, I'd probably think the same thing, because I've been doing this for like almost 8 years now. And that's what happens. These things explode and they come back. So I was ready for that, and I should have taken it, but I didn't. I wrote it back, and I got something, but I didn't get as much as I thought. And now we're doing it again. Suddenly, Roaring Kitty's back, and he has a stream, and he fails, and everybody thinks it's over. They came in early with their earnings and their terrible miss on everything, basically. It's like, hey, this is the worst case scenario. Boom. What do you think? That's on the day of this guy's stream. Well, this guy had enough hope to just hold the price up. And then what happened? They realized he had nothing to say. And whether that was by design or he really is just some dude that was drunk and came on, I don't know. It was actually kind of amazing in some ways, but it was also so boring to watch. It's so cringy, just uncomfortable. I just sit through like 40 minutes of this uncomfortable, cringy bullshit to be like, dude, just talk about the stock. It's all, everybody's here for you to say like, all right, I'm into it because of this. I'm not trying to do all this crazy stuff that they're accusing me of in the media. I'm just trying to say this is why I like the stock. I'm still with it. Here's my position. It's not any different than the people that go on TV and say these things, or the people that go on social media and say these things. It's just me liking the stock and doing my research. But no, he came in with band-aids and fucking slings and was like, oh dude, it's the thing now. I'm the guy. I don't know what to say now that I did my, all he thought of was the fact that he was going to do that. He's like, it's wounded and I'm sending a message but I'm not dead and all that. He's just saying it's him. That's all. This thing isn't done yet. All the people that are just sitting there crying about how much money they lost, it's not done yet. I promise you. I don't know if you're going to get this back. Okay. If you get a chance, you take it. Like, it might do the thing they say and go to the moon and stay there, but what are the odds? What does history tell you? If I switch this chart to the longest thing, let's say quarter over quarter, this is the history of GameStop. In fact, can I just go year? There's GameStop's stock history, not their whole company, but it's the stock. It was kind of just doing its thing pretty well, and it leveled out. And as it came down, there was a massive short squeeze because this was why there were shorts in it. Why was this thing over shorted? Because it was an obvious short. Nobody's going to go to game stores, and we knew that 20 years ago. Why would you go and sit in bed at home and just order your game? You don't have to do anything else. You don't have to get ready to go out and be social or anything. You know, you think, what about when you want it? Yeah, well, that's why it lasted, because there are a lot of people that want to, including me. I want to go out and look at stuff. I miss the days of going into a store and looking for a game. It was so much more fun, and you appreciated it more. But now that there's so many games, it's like you have no idea who put effort into a game anymore. You really, unless you really look at the trailers for the game and do all this research, just by going through and like reading about it and seeing like quick videos, you really don't know who, like, how much effort was put into these games until you go, oh, that's why it was $1.50. You know, it's the economy we live in. But at this point, you could still get those games, but at least you had an experience. You had somebody to talk to who knew. They played them all. They're bored of them. They hated their job at that point. That was the perfect time to talk to them because they had already done everything you were worried about and could just say, oh yeah, this. And that would save you so much pain. And you could just have fun with your game. You know, that was the environment that it had. And it's still kind of there, but it's mostly because people need jobs. And they're just looking for it in a place that doesn't seem as bad as some other places. So you get what you get. But also look at this. In the long term, this is the trend line. $15. Maybe we'll say between, the high teens and the mid-teens. That's what this stock has peaked at or rested at the entire career, its entire lifetime. Which is interesting because that tells you when it returns to these levels, that's normal. Look what happened every week. It shot way above it, came down quickly to this channel, and it settled right here, because this candle means it opened here and closed here, but it had the extremes of that. And then it gets to this next one and it has the low extremes. This is when people were really upset about it. This is when I was looking really good for being like, I don't know about this. You know, that was the first thing I posted was like, this is gonna suck. And what do you know? It did. It was terrible. People got absolutely wrecked in this whole thing. People that have been waiting for 3 years were buying up into this thing like diamond hands. That's the religion part of it. You got, and I was seeing some, like, there are some people with massive money that were into this diamond hands thing. And I'm not talking about the diamond hands concept. I'm talking about the GME diamond hands, the original diamond hands, the one it's like, stick it to them because we're the ones squeezing them out. And you kind of are. But you're basically backing up the large entity that makes it possible. The large entity is the one doing it. You just provide the cover for everyone to focus on while it happens. So we squeeze, we come back down, trades in the range, and it happens again. But it's a lower high, which is what I said. This is coming back, but in a lower high. And boom, it did. So what do you think happened? You know, what may have happened is people like Keith Gill or whoever has favorable calls in this saw these run-ups, sold calls into them, and let everything drain out. Like, oh, he's got these calls, why isn't he exercising them? Maybe he wants to sell against him, or maybe he already sold and he needs them as collateral. Because you could do that in different accounts, you can do that in ways to hide it. I don't know what he's doing, he might just be long, but I'm very suspicious of the timing of these things and the way they play out every single time. And GameStop just happens to sell into both of these, which I would do if I was them. So that part I'm not even faulting them for, because they have the ability after years to finally raise billions of dollars. When their debt that they got from the pandemic was starting to run out, boom, this happened. And now they can re-up for another few years, just like they did before. And that's what happens with these companies. These big things happen once in a while when they conveniently need them to, and then they kind of just go away. And the proceeds from them help them run that time. And whether it's natural or artificial, this is just what happens to these stocks. And since it is the focal point, GME, GameStop is the focal point of this whole thing, this is what you're going to see every single time. So I was ready for it, but just enough to make a tiny profit, not enough to take advantage of this whole thing. Like I knew, my gut said, hey, sell. When it's, well, set your order at 75. And if I had set my order at 75, I would be so happy right now. That's the absolute perfect spot to set it, because you don't want to set it at the pure top. You don't know what the liquidity is like right here. That's why it flipped, because the liquidity was not good here. So if you can set to this point in the range, you're still way above anything else you could have gotten, and you're still way above where you were before. So that ends up being about as good as you're going to get. Right here, if you got, that was the previous one. So yeah, if you got any of this candle that went up to the top, 50, 65, in this range, you're good, because it did go higher than that, as we saw earlier on the other chart. It did go above these points, but this was the average point for this time frame. And it got rejected when it went up there. Came back down to this median. Again, conveniently selling shares. So this popped up, sold shares, right? Narratives. This popped up, sold shares. Narratives. And what's it going to do? I don't know. I still have a couple of shares. I was just thinking, like, if this thing goes to all-time highs, I'm going to be so upset that I didn't at least have something. So I bought a couple of shares, like a very tiny amount. Like a couple $100 is all I have in this thing, across multiple accounts, because I do not want to risk any kind of money to see. Oh, it's not. These people that are making huge gains, and I've been reading all these pain stories. No, dude, I don't want to be a part of that. I don't have the guts for that anymore. I used to. Then when I started doing this, I tried to get into it, but I can't. This is just too much. Absolutely too much. So if you took your 75 when it popped up there, you would have been above the average, because that 60 something was the average, and you'd be sitting pretty right now, which is what I could have been. But no, I took my little gain, got out of there. Just like a lot of people are still in it, and they're gonna diamond hands. So the other thing I want to point out before I'm done with this, so let me switch this back to the one day. We're still on an uptrend. Even though that trend is broken, we're still on an uptrend. We're still severely up. This thing was in like the low teens. It was almost in, oh, look at that. It got to single digits for a little bit, kind of bounced. And then that's when this thing started happening. So I'm sure during this, all these people that had risked the other direction were just absolutely taking profits, but also thinking that it was going to keep going. And when it didn't, those people that took profits got overconfident, got back in, and the people that didn't were just in denial. And now we have their worst nightmare, because months later, look where it is. Even though all this bad stuff has happened, it's still just under $30. That's still very high. My average is like around here somewhere. You know, if I was smart, I had it in the teens. I could have been, but that's the way it works. At least I have something. So we'll see what happens. Unless you're into stocks majorly, I would not suggest ever attempting something like this, because it's just so insane. It's such a roller coaster ride, and if you're not ready for that, you're gonna break. You'll sell at the wrong time. Almost everybody sold in this mess right here. This is when I was buying. When it hit like 17 or just below 18, I was scooping it up so much right there, because I was ready. Like I thought, all right, here we go. This is the thing, and boom, it was right. But I dumped it before that because I was thinking about other plays. So I didn't have as much going into this as I had hoped. That was my second mistake. I didn't stick with the play. And if I had, I would have definitely taken profits up much higher, because I was ready to set like a $40, $50 max on that. So, I mean, if I had set like to 45, which I think was where I was originally getting, 45, I would have been like, that's pretty close to the top. That would have been amazing. So, but that's not how it played out. And I'm still in it with a tiny, tiny bit. We'll see what happens with that. But I took my gains. It's enough to where, like, no matter what I lose, I'll just lose the rest of those, like, little gains. They don't really matter that much. So that's my GME spiel. I think most of the craziness is over at this point, but it's not done, because we still have another cycle to take care of. Like, we had the derivatives expiration when he came back. That was very shady. And then we have the swap expiration, which he came back again, very shady. and just exiting at the weird, like right when the expiration period for contracts went out, boom, suddenly gone. Clip of VT, see you later. He comes back, what, 3 weeks, a month later? I don't know what it was. It seemed like a month. Maybe it was just a couple of weeks, but it seemed like a long time. People were so, by this point, people were just trashing the Roaring Kitty on all these social media platforms. All the ones that believed in it. Except for the hardcore ones. 90% of the people that got stuck in this were just upset. And then when this happened, they're not, those people have not come to terms with the fact that like this probably isn't going to happen again. I mean, I think there's going to be a build of some kind, but I don't know where the base is going to be on Monday after whatever news comes out, surprisingly on the weekend, like always happens. Oh, why is it suspicious? Why is the Roaring Kitty different? Because he comes out right before things open up when it's the most liquid point in the world. The point before futures open on the weekends in the United States is the most illiquid, worst time for things to happen. Because the absolute least amount of people participating are there. That's the bottom line. When JP Morgan comes out, like, why could JP Morgan and Goldman Sachs do it? Well, they don't come out before futures open and go, hey, I haven't been here in 3 years, but check this thing out that you should look at. They go on CNBC when everybody's at work and nobody cares, and the people that aren't at work aren't paying attention to it, or if they are, they don't understand it. And they're just talking about like, hey, we bought the stock. Why don't you buy it too? But in a more convoluted way. Like, oh, they're manipulating. Are they? A little bit? Yeah, they're absolutely manipulating. But it's not the same thing as coming out and being like, hey, I know I have this massive following. How many? All right, so 600,000 people watched this stream at the peak. Actually, more than that, somewhere around there. And they're wondering, like, why does that, blah, blah, blah. Well, that's how many people watched it. How many other people know about it? Now, ask any of those other people, any other financial person, ask them who Kathy Wood is. Okay? Ask like the general public who Kathy Wood is and see if you get an answer. Everybody in the finance world knows who Kathy Wood is, but very few people who aren't in this world know. They don't care. It's just another financial person that they can't think about because they have other things going on. And that's why finance is the way it is, because most people can't think about it. So smart people did what they did, and now we have this system that idiots run. It's like some smart people created like a way for the economy to expand responsibly, and gamblers were like, hey, what if we just double it? That's the history of economics. Like, how do we get where we are? Well, somebody just put some blockades up and went like, this is a way to be responsible with our money and survive long term. And somebody went like, I want more cocaine and hookers. How can we turn that up a little bit? Oh, we can? Good. I got more cocaine and hookers. And they wrote a book about me and said I'm a genius because I almost got in a car wreck or something. Well, there you go. Now we're at a point where GME is taken off and people aren't paying attention until it's too late. And what happened when GME went down? Crypto went up. Why? Because the same people are in it. Crypto, tech, GME, memes, that whole thing is going to be a very similar crowd, along with all the traditional markets, because those people also follow the traditional markets. And people that have been in the TradFi space forever don't want to admit that. Guess what? They do. They're there. Everybody's there. It's not as cool as you think it is. That's why new stuff is happening, and people are afraid of that because they know, fuck, now I have to actually change what I think in order to survive in this new world. It's not always easy to do. So why not just demonize it? There you go. Oh, criminals use it. Okay, criminals don't use every other method ever. You've never seen somebody with a card skimmer or a hacker that takes passwords or whatever it is, like it's the whole thing is just, you can scam whatever you want. You're just villainizing it because you're afraid of change and you think your power structure that's been in there forever is the only thing standing between you and like protection from the scary parts of the universe. And that's not the case. All right. We're all just as susceptible as we ever could be. Some of us just have slightly better protection because of massive amounts of money. And that moat only goes so far. So we're all in this together. We're all in the same solar system. You can talk as much shit as you want, but we're still, if the planet's orbit is disrupted for whatever reason, we're fucked. So far, it doesn't it doesn't take much, and we're absolutely fucked. And then, okay, think about, we're circling the sun, and we have all these other planets. But what about what we're circling in the galaxy? What if something else comes in contact with us? What if there are other rules of physics that we don't understand and that we encounter at any point right now in 100 million years, whatever? We're really not as safe as we think. But yet, what happens? We continue. We don't die. And that's the thing that people don't understand. The bears are always wrong. They're wrong 99.9% of the time, which is why I can say always, because it's essentially always. When they're right, they're super right. But they're not right because they were right. They're right because they're stuck on that button. They're on short, short, bad. I'm sad, everyone else is sad. I'm sad, I feel bad, everyone else feels bad. That's what they're doing. And we all want to do that. I did that. I got into it with starry eyes and I got crushed. And I went to the other side and I got crushed and I got upset and quit. And I thought, I don't know what else I'm going to do here. So I went back to it and just kind of sat back and watched it for a while. Thought, well, maybe I can do something in some trading areas with options. And maybe I can do a little bit of this with shares long term. Eventually realized, oh, you just build up some stuff. Even if you literally are living in a country where you can only afford $1 or $5 or $20, you can change your life if you just put it into some stuff once in a while. Because everybody gets a point, no matter how little you make, where you have the option of choosing pleasure or necessity with your money. You have to pay these bills to survive, or if they're covered, you could use them for something else. When you get to that point, and that something else is something that's like a meal or an experience that you don't even remember, you're throwing that money away, essentially. Like, if you use it for something that's very valuable, that's great. Most of the time, you're not going to. So if you just put it into something that'll build over time, even if it's ridiculous, if you get any gains from that, it's worth it. It's better than that meal. It's better than that experience that you don't even remember. Not every dollar has to go from that, because the only reason that you want to live is because you want to do stuff like that sometimes. So you need to do that. But you got to realize, like, how often are you doing that to escape pain versus doing it to actually enhance the experience? And if you're doing it to enhance the experience, that's where you're on the right track. But if you're doing it to get out of some kind of pain, you're wasting that experience. So you could just use that money to build your future, and that way you don't have that pain with you anymore. You can get past that pain by just working on it day by day. It's going to take a while, and you're going to want to give up. It's going to suck. But it's better than nothing, because if you protect that at all costs, eventually it works for you. Like, what I've been doing is a mixture of everything. Put my money in something that somebody else manages, let them grow it, and then do a little myself. Some dividend stocks. I've got a couple of growth stocks. I've got some speculative stocks. And then I've got some crypto investments and speculative trades. It's as basic as it can be. It sounds like a lot, but it's not. You just get into something, think, what's solid? Let's invest a little bit in a few of these things, so if one of them goes bust, I at least have these other ones. You don't have to Warren Buffett YOLO into one thing, because Warren Buffett is just the like counterparty to a YOLO. He's literally like the responsible man's YOLO. If you have all wisdom and no intelligence, you can YOLO like Warren Buffett. But if you have no wisdom and all intelligence, you have to get into a meme coin. Those are the only two. You can't, like, if you're anywhere in between those places, you're not going to be able to balance with either of them. You have to find a way to just get into something that can pay you over time. Either you're on the right track, you're on the thing, you make it, and you're good, or you buy the thing that builds up over time. That's what I like about dividend stocks, and that's what you can get with certain cryptos, and there's staking, there's all these things. And yeah, there's scams, and people complain about it. I'm always arguing with the people that just, like, they're either Bitcoin maxis and they hate everything, or they're just super pumped up by the traditional media to be afraid of it. They're thinking everything's a scam and it's all, like, terrible money. It's like, no, listen. You can do whatever you want with any kind of money. It's just a way to live life without the control of a very small amount of people over your entire well-being. That's the whole point of it. And yeah, it's co-opted in all these different ways, but it still has an element of democracy in it, which is why it's interesting and why there will be a demand for something that's real. Yeah, there's going to be stuff that's centralized and looks decentralized, but there are going to be actual decentralized things. They're going to compete against each other. And why do I think they're both going to survive? And here's why I'm not so bullish on either one, because there are pros and cons to each. People that want decentralized economy are going to reap what, like, they're gonna get what they ask for. They're gonna what's the saying? Be careful what you wish for, right? So that's what I'm saying about both of these things. Being like maximalist in either direction is a be careful what you wish for situation, because you'll get to a point where the things you didn't expect are so terrifying you'll wish you had the old control back, and that can go in either direction. So you can't be too far in either one of those to think that's the right way. You need at least a combination of one and the other to switch if things get too far in one direction. Because that's when it's catastrophic. So my thoughts on GME, fun to play. I wouldn't fuck with it unless you know what you're doing. I have a very tiny position in it because I just want to see if this trend continues for a little while. And if it doesn't, oh well, I could lose. It could go to zero, and I don't care. It's such a small amount of money. But if it goes up, a small amount of money could be a lot, and that's why I'm playing it, because it is literally the crypto of stocks. Crypto is interesting because if you don't have a lot of money, you can make a lot of money in crypto. way more than traditional finance, and that's the thing they're scared of. They know that they have a monopoly on fees because it's hard to figure out what to do. Where's the money in finance? Fees. Charging people to do things. You're not going to find these genius Michael Burrys all the time. Michael Burry is always wrong. He's lost so much more money than he's ever made. I guarantee it, because I listen to what he says. And then I also see his positions. And he happens to get one right every so often, you know? He happens to get one really crucial position right every so often. It's just enough to keep him afloat, but like, he's not the Michael Burry that people picture in anything. If you just look at any of these people, right? They all have weaknesses, and they all have faults. So it's to be careful what you wish for situation in everything, right? If you want to be a bear, yeah, be careful what you wish for. You're going to be right once in a while, but you're never going to take gains in time. You think the Bears took gains after this? Some did. Oh, they watched it happen too. They're freaking out. The Bears are absolutely terrified right now. Even though the Bulls are depressed, the Bears are still way, way under on this thing. Even with the new shares, time 1 and time 2, the 100 and something million shares that they put, I think it's 110, right? 110, 115, somewhere around there, million shares, just in the past few weeks. But the float, I think, was a couple billion. So, you know, it's really not the end of the world. Which is why I still have some shares, because people are, I think, there's so much emotion around it, most people can't think straight. I've been watching reasonable people just argue about the dumbest thing ever since this popped off. All the dumbest things, just, they can't stop fighting about it. Like, listen, if you do this long enough, you're going to realize this is a pattern. It's doing what it's doing. It's not done yet. Whatever happens with the next red cancel, there's going to be another bounce. So even if it goes up, comes back down, the more violent that is, the more likely there is going to be a bounce. And I'm just looking for half the distance, roughly. It doesn't have to be exactly that. You'll see a bounce comes up, you get about half the distance, right? And then it comes down. The same thing can happen again. Half the distance would be a place where things had turned around before on short time frames, which is why that's interesting to me too. So any of these portions where, you know, it moves quickly because the low volume and the huge change in buying and selling, where it stops for a little bit, that's interesting on the short term. But in the long term, I'm only looking for these kind of things. So that's my thought on the whole thing. It's a crazy deal. I meant to play the game a little more, but really I just came on to rant because this whole Roaring Kitty thing is insane. It's not over yet, so just keep a watch. So the next time I stream, I'll probably have more to this. The conclusion, who knows? I don't know how long this is going to last, but this is going to end in tragedy for a lot of people, I can tell you that. Because even if the price comes up, there are going to be people really going hard in these big pumps. That's why they last. So that's the other part about retail. So retail is not only the thing that started the spread of the idea, popularized the old idea. It's also the thing that provided the liquidity at these massive pumps, at these points, because this is when emotions were at their highest. They thought, this is it. Everything else in my life is terrible, but I have this money, and if I put it into this and it doubles, my problems are over. So they were doing it. This whole thing. They're getting wrecked. They saw it again, they did it again, and new people did it, and it's not going to end well. You know, it's for people that hold on long term, it's probably going to be fine, but for people that are in and out of this thing, it's not going to end well. Even if you're good, it's going to suck. So if you get your gains in this thing, don't play it again. I watched this one guy nail it twice. It's like, if you nail this thing twice the way that guy did, just step out. Don't even do it again. Unless it's ridiculous, don't do it again. So that's my thought. If it pumps again halfway, I'm done. I'm taking those last few shares, my tiny gain, getting out of here. So that's what I'm going to do now, though. I just wanted to talk about how ridiculous this thing is and the fact that it's not over yet. And it's going to be they could make a second movie to this. That whole Dumb Money movie, they could make a second movie and it would be perfect with what's already happened. I'm going to get out of here. So thanks for hanging out. I'll talk to you later.